Also watching TVC News at one. Let's turn attention to business now. A recent report from Nigeria's Debt Management Office reveals that the nation's total public debt has increased to 121.67 trillion naira. That's about 91.46 billion US dollars as of March 2024. This figure encompasses the combined domestic and external debts of the federal government of Nigeria, the 36 states, and the Federal Capital Territory. This represents an increase of 24.3 trillion naira, representing 24.99% when compared to 97.3 trillion naira in December 2023. The increase is driven majorly by naira devaluation, as the total debt was reduced in dollar terms by 16.7 billion US dollars. That's about 18.34%. A breakdown of the total debt shows that the domestic debt component was 65.65 trillion naira. That's about $46.29 billion, while the external debt component amounted to 56.02 trillion naira, and of course 42.12 billion US dollars. Elsewhere, the federal government is tasking African countries to invest more in the training of small and medium enterprises to improve trade standardization and boost the continent's economy. This is the government saying that it's committed to promoting education and technical standards as key drivers for enhancing intra-African trade. Speaking at the ongoing 30th General Assembly of the African Organization for Standardization in Abuja, Minister of Industry, Trade and Investment, Dr. Doris Uzoka-Aniti, emphasized the critical role of implementing standards in fostering sustainable development, innovation and export-oriented manufacturing, underscoring the vital link between education, sustainable development, industrialization, and trade. The minister was represented by the Permanent Secretary of the Ministry, Mr. Nuran Remy, said successful and sustainable export depend on the compliance with quality requirements of standard for goods and services based on global recognized quality infrastructure. Nigeria's trade relationship with the United Kingdom has long been a crucial component of the country's economic landscape. Recent data shows Nigeria's trade with the UK declined by 25% in the first quarter of 2024. Economist and research professor Dr. Andrew Nevin examined underlying factors driving this trend.
Comparative advantage in producing cassava, for example. The issue that we face is getting the certification. So when the Naira depreciates, that's not helping us immediately with the export of agricultural products. The market is there for us. We have the best growing conditions for many of these crops that the world wants, that we've enumerated, but we don't have the certifications to go into Europe. And I think, I'm sure everyone listening on this program has read articles where we've had crops that were meant for export that either didn't pass certification or they got stuck in transit and essentially rotted to a value of zero, and that's a terrible thing. So I wouldn't focus so much on the exchange rate. I mean, we are not, we already have a very low exchange rate. More devaluation is not of any help to the country. What's of help to the country is solving some of these kind of foundational issues. In the case of the agricultural exports, and I've been consistent, we should be exporting grains, and we should be exporting hydrocarbons, and we should be exporting agricultural things. Those are the three things we have a comparative advantage on. But we still have the challenge in agriculture in meeting the standards that are required. So, but there are efforts. So, for example, Edo State Governor, you're creating processing zones where the farmers aggregate their products. They're able to meet the standards in a single warehouse. An individual farmer obviously can't meet these standards on that. So that's where the focus should be.
Outside Nigeria, Asian shares are ending the week with worries after a recent rally to 26-month highs, real profit taking, while the relentless strength in the US dollar pushed the Japanese yen towards the intervention zone. Europe is set for a flat open, having bounced a day earlier as red court gathered pace. Both Euro Stoxx 50 futures and FTSE were little changed, but S&P 500 futures rose by 0.1%, and Nasdaq futures gained 0.2%. MSCI's Broadex Index of Asia-Pacific shares outside Japan fell 0.6% earlier today, dragged lower by pullback in technology shares, tracking a mixed section on Wall Street overnight. Japan's Nikkei was up 0.1%, and the yen remains jittery. Chinese stocks fell slightly, with the Shanghai Composite Index struggling to stand above a critical level. The index is 0.1% lower, having slipped by 5.6% since a recent multi-month high in late May. Hong Kong Hang Seng Index tumbled 1.7%, extending the weakness seen over the past month. The World Bank has approved $275 million in credit to support Cambodia's efforts to promote long-term economic growth and resilience. World Bank country manager for Cambodia, Mariam Salim, says the financing will promote reforms that boost private sector competitiveness, strengthen the country's fiscal position, and provide assistance to the most vulnerable. She said Cambodia's economy has recovered from the impact of the COVID-19 pandemic and subsequent shocks, with focus now on shifting towards achieving sustained high-quality growth. According to her, the new support will boost private sector competitiveness, strengthen the government's fiscal position, and provide assistance to the most vulnerable Cambodians. The new facility comes as a relief for companies, addressing economic challenges and create an environment in which firms can thrive. And in the crude oil space, prices were a little changed earlier today, but we're set to rise for a second week amid signs of improving demand and falling oil and fuel inventories in the U.S., the world's biggest oil consumer. U.S. West Texas Intermediate fell to sell at $81.25 per barrel with a downward price margin of 0.05%. Brent crude futures also experienced a downward price margin of 0.09%, selling at $85.63 per barrel. And Bonnet experienced a downward price review of 0.07%, selling at $85.47 per barrel. And for the OPEC basket, crude oil dollars are offering $84.50 per barrel with an upsurge of 1.73%. Well, that's all for business. Coming up next is sport. Please stay with us.